Hi, good morning. Thank you for joining us today for this webinar with Nucoro and Jumio. We're going to be discussing how to build a first-class digital onboarding on eKYC experience. Thank you for joining the session. Let me introduce our two speakers today, Nikolai Haak at Nucoro and Simon Kingston at Jumio. Nikolai, would you like to introduce yourself?
Sure. Thank you, Claire, and then Simon, for the opportunity. Yeah, I'm Nikolai. I'm the head of strategy and partnerships at Nucoro. I've been with the firm ever since we started working on this. I'm one of the co-founders as well. I've gone through a plethora of roles, and now I take care of nurturing, building, and exploring further relationships with all the partners in our ecosystem that we work together with to build solutions for our clients, like Jumio, of course.
And Simon?
Yes, thanks, Claire. Thanks, Nikolai. So I'm Simon Kingston. I recently joined Jumio back in the summer. I'm a true virtual employee, yet to meet any of my colleagues in person. I'm responsible for building our partner and channel ecosystem here in EMEA, building out joint value propositions and engaging the Jumio eKYC technology in our partners' overall solutions to marketplace.
Thank you both. So I thought maybe to start the conversation today, as our attendees might be looking to launch new digital banking propositions to unlock new revenue streams, we could look at how they can best optimize the eKYC process, on how to refine their customer experience. So I think what we're going to do is go through a series of questions, and I'll get both your views. If we start with this first question, Nikolai, Simon, how can banks better engage with their customers? Nikolai.
Well, I think it's helpful to take some inspiration from fintechs. And why? Because I think a lot of fintechs do have a different mindset, and they think client first, and I think that's very, very important. And also it comes as a part of the transformation from going from digital commerce to a digital operating model, and then also having a digital business model, which is where fintechs tend to be, obviously being new and challengers. So I think what it allows them to do is to think a bit more like the average person, and this is also where the money is, in terms of, and we talk about financial services here, it's with the average retail client, and their 100K deposit at a bank that just sits there not doing anything. So what do these people want, right? So they want to go, on a honeymoon after their wedding, they want to purchase a property before they're 40, and they want to probably retire before they're 65 or something. So they have these goals and these objectives, and financial services and banks also, it's just really a means to an end to achieve them. But if you have that mindset and you go to any of the major high street banks, I'm not going to pick one out now, but if that's the mindset you have of trying to achieve a goal, what you're presented with normally is a plethora of acronyms and terminology that means nothing to the average person. It's the opposite of being client first and thinking client first. And I think that's because banking products tend to be built by people who work in banks. And we all love to talk about and think about, the details and all the intricacies of what it is we do. But that's very far away from the mindset of the average person. So you're letting the customer do a whole lot of figuring out and mental bridging when it's really you who should be doing that. So thinking customer first and client first, it comes with, and what enables you to do it is employing technology, because then you can do that at scale, fully automated and at low cost. And this allows you to be client first. And it means asking yourself, what's the goal of the user here and what's the most convenient way for them to achieve it? And then, especially talking about onboarding, and Simon has to say a lot more about this, obviously. It's such a key part where you need to think client first if you want to be successful.
Absolutely. And Simon?
Well, I think as Nikolai mentioned there, good engagement starts with the customer onboarding experience. And I think looking at sort of providing that overall banking experience expressed in the terms of the client, of the individual, I think it also means that there's a lot more competition out there for users of choice of banks, and so those and I think there's a study being done recently. Millennials are 2.5 times more likely to change bank and provider according to their needs. So obviously offering a frictionless experience, a delightful user experience is going to be key. And that starts with, a great customer onboarding experience. And I think, from our point of view and our understanding of the marketplace and the research that we've done, over 80% of financial institutions have a goal to improve their customer journey. Now, as we migrate from a traditional analog world into a digital world, nevertheless, we still need to provide discharge our regulatory compliance requirements for building a process to know and identify customers you are actually working with. And I think the challenge as we migrate from that bricks and mortar world to the digital world is not to clone your existing processes and make it very, very clunky. Nikolai said, people are looking to users are looking for a very different experience moving forwards. They're used to doing things on different devices in multiple channels. So it's important, I think, for financial institutions to avail themselves of modern technology that allows them to establish a trust anchor, a trusted relationship with their customers, provide the necessary level of fraud prevention and detection, and discharge their compliance and regulatory obligations. And to do that in a transparent manner, whilst the user understands why he's being asked to do what he's doing, and can see the benefit of that from an overall sort of enhanced, secure relationship with the bank. And then the challenge then is to do that with an ease for the user that maximizes the chance for because it's an easy process for the bank to convert applicants into productive clients, and to balance that against the need, to detect fraudulent operators. We are, I think, only about 98% of applicants are genuine. There's only about 2% sort of fraud, but of course that's where we need to focus our efforts. So you need to build an increasing friction as you detect potential elements of fraud in that process. So from my point of view, that's about being able to capture the identity of users easily, being able to do it once, so ensure that have the necessary course correction adjustments in that process, so that we don't get to the end of a process, look at the validation process, and then have to go back and ask the customer to repeat it, but rather we do the course correction during that journey. And that means utilizing the best sort of AI enabled biometric enabled KYC processes, and adding additional fraud checks as necessary and dependent upon the regulatory requirements of every individual marketplace. So it's a great opportunity for banks right up front to display a new way and ease of a way of transacting and engaging with the bank, and understanding from a client's point of view the devices and how they want to transact that application, if you like.
Thank you.
I think I just wanted to say at the beginning, you made a very important point, that you give the user a rationale of why they're being asked to do what they're asking them to do and how important that is. Because if you think of the spillovers from other services that clients consume now in the majority or almost exclusively digitally, think of media, for example, like the streaming of audio and video, or e-commerce, where which retail is to a very high degree, of course, there. In your onboarding journey, you're also asked for information potentially. Think of the examples there, right? You might be asked for which movies have you seen previously and did you like, or or by also your purchase history. You give information to the seller, to the provider, and that makes intuitive sense for us, because we know, okay, by me giving you something, my experience improves afterwards, because I get better, higher quality recommendations or anything, and in the, and I think you're absolutely right, you know, that it's a missed opportunity in the banking space to also translate it into something that adds value for the client instead of just being a nuisance, you know, in the process.
Absolutely.
Yeah, I think just to pick up on that, Nikolai, you know, there's a great opportunity, I think, for the bank to I think a customer wants to understand that they are dealing with a trusted and compliant and secure organization. Okay. Yeah. So you say whilst there is that, so they have an inherent understanding that they need to evidence their identity. But I think then, you know, being able to leverage what you capture at the front end of the process and use it, you know, subsequently in the life cycle of your engagement with that client. So for example, if you've taken the time and trouble to upload a selfie and a biometric image of yourself, being able to reuse that as a means of re-authentication or authentication of higher value transactions further down the line, that there's inherent value and increased security in being able to do that.
And I was about to ask you both, actually, your views on how KYC fits into the overall banking customer experience. Simon, did you want to start?
Yeah, so I think first of all, there's studies out there that customers are inherently more satisfied with a digital experience than they are with traditional banking experience. I think the figures are about 63% of online banking customers are satisfied with their experience, rather than about just 19% from a additional point of view. And so understanding how KYC enables that sort of frictionless ongoing engagement throughout the process is key. You know, the idea is obviously the days of knowing your bank manager personally and intimately have long gone. Even in traditional bricks and mortar today, you can't, you know, it used to be because you knew your bank manager, you would get the loan. But so there needs to be that establishment of that trusted anchor. So the idea is that, you know, you have to know who your customers are. Your customers can do a lot of research on who you are, but you need to validate who they are, make sure that they are real at the point of onboarding, and indeed sort of continually check throughout your relationship with them and monitor them on an ongoing basis. It may be that you need to leverage additional services beyond just establishing the identity through a government issued photographic identity document and the selfie and liveness of the individual presenting that, overlaying it with many of the AML checks that are also required by regulatory compliance, and ongoing from a sort of transaction monitoring point of view to detect fraud. KYC obviously sits right at the front of the process initially, and you know, I think it's about 48% of fraud happens within 24 hours of opening an account. So getting that check and validating that identity right is correct. Again, balancing it, as I said, with that frictionless process, because I think about 40% of potential new account applications are abandoned or sacrificed during the ongoing process because it's too time consuming and clunky. So for that overall experience right up front, employing ease, but the balance with the fraud checks and compliance checks. And then from an ongoing point of view, I think customers understand banks have to discharge their regulatory responsibilities. But I think, again, leveraging, as I talked earlier about, you know, that biometric identity that you've established right at the front, then to replace outmoded sort of knowledge-based re-authentication. So the need for, you know, a passport, remembering your mother's name, or which school you first attended, which are also inherently insecure these days. There is a lot of the information about me is available to purchase very cheaply on the dark web. My previous addresses, previous relationships, passwords I may have used in other services in the past. So I think, you know, clients understanding that they've got a more secure way of leveraging their identity on their ongoing engagement with the bank is key.
Yeah, I think we like to always think of like every step along the way of the client journey. If you want to innovate, what does it mean? And at its core, you know, innovation means it means one of two things, right? You do the same thing at a lower price, or you do something better at the same price. And that's otherwise you don't have something that could be called innovation, or you don't have a proposition either. You're not running a business. So, and I think at its core, it's important to realize that the inherent organic or traditional way of KYC, there is no net positive of the process. For the consumer, and if you think of the traditional way of approaching KYC, it's always a disruption of something else that they want to achieve. It's not something, definitely not something they want to be charged for, other than with the time it costs them to go through the process, of course. So hence there, the improvement or innovation part needs to focus on the, you know, the better part of what innovation has to achieve. So compared to the offline and paper or document-based experience, it needs to be more seamless and more frictionless and intuitive than that. Also because it's such a crucial part in the journey, obviously, on the onboarding journey of a high sensitivity product like, you know, financial services. And for the firm, traditionally, it's a cost center, right? You look at it, it's something I not necessarily want to do, but something I have to do to be able to conduct my business. So there, again, naturally, traditionally you would think of, no, it's only the cheaper part of innovation that, you know, becomes paramount, and therefore it's, you know, automation and throughput volume are key and become key. But that's also coming back to what we said earlier. It's also where it gets tricky, because it is such a crucial part of the customer journey with a high risk of losing the client. Firms tend to look at KYC with a somewhat very narrow lens, I think, and only of the identification aspect, and especially to Simon's earlier point, you have a key moment of engaging with a client, and you ask them for very specific information, and you need to give them a very good story of why that is and what it provides for them, of why they need to give you these intricate details about their person. And I think many are missing out on extracting more value from the process that would then subsequently allow you to build much better products for the client further down the line.
I agree. And I was about to say, oh, Simon, did you want to add to this?
Well, Nikolai brought up a very good point. It's interesting to see the transition, you know, with the technology that we have today. You know, we've enabled much more of that old paper-based, branch visit orientated onboarding process to be completely digitized. I was speaking with my 25-year-old daughter the other day, who, you know, she has a Monzo card. She got her Monzo and loves the Monzo banking experience. But interesting, and she joined them 4 years ago. But 4 years ago, her onboarding journey still took over a week to complete before she had her account opened. That's not acceptable in today's marketplace. You know, and many banks have moved to, you know, make that process, if not instantaneous, much quicker than a week, certainly within the day.
And I think there's another question we should answer really. Are there any specific requirements that financial services providers should pay particular attention to, in your sense? Nikolai, did you want to start on this?
Well, I mean, there's the, you know, the regulatory frameworks in which we all operate and that you need to adhere to be able to conduct your business. So it's just an essential, you know, part to stay alive and not break the law, obviously. There's that element. But then also just in the context of also the, you know, the current environment where probably and quite significantly impacting your business in some ways, and that is, for example, especially true for the wealth management segment and private banking segment, a major channel of engagement, the offline world, has completely disappeared and it has broken away. So you have remote and technology-driven onboarding and client engagement as not only essential for your business, but as key to survival. Otherwise, you don't have a channel of engagement anymore. And we have conducted a study earlier this year, during Q2 of this year, that looking at analyzing download data from the Apple App Store, I think that the Play Store maybe as well, but it turned out that approximately in the UK, 6 million people downloaded their banking app for the first time during Q2 2020. It's quite, for us working in this industry, it sounds quite unbelievable that you would not have, your banking app on your phone, but of course it's the reality for quite a big part of the population apparently. So it also means that in the context of that, if you switched account, maybe even, or also if you went through the process and for some reason you had to redo some KYC or identification or authentication to access it now through a mobile channel, it means also a significant part of the people went through that process for the first time. And I think there it's also important to think about the range of people you engage with and how topics like accessibility and inclusivity matter a lot. Because depending on the type of proposition you have potentially very, very different audiences in front of you. Simon just mentioned his daughter, and we tend to, when we talk about digital financial services, think of those, audiences first, obviously, the digital natives and the millennials, and plus maybe going a bit up. But of course, you have the entire range of people who now are engaging digitally with their banking proposition. So I think what's especially important is looking at KYC and all other processes in the chain. You need a process and you need technology that is flexible enough to build an appropriate journey for everyone across the spectrum. And plus, of course, you also, because of the sensitive nature of information in this process, you need safeguards to probably go a bit beyond what you would expect in other industries. But I think the flexibility to accommodate a very wide-ranging spectrum of audiences, I think that's very important.
Yeah, I think that's a great point, Nikolai. Mentioning there the initial interaction with the banking apps. I think we've seen, due to the prevailing circumstances, COVID has certainly driven the digital transformation agenda more rapidly than would otherwise have been so. I think Microsoft CEO famously saying, I think we've seen 2 years of digital transformation take place in the last 2 months. And I think that's very evident to all of those demographic sets. So from a point of view of what's important for financial services organisations in that eKYC journey, there's certainly a consideration of how do you orchestrate all of the necessary inputs that are appropriate to the class of risk that you may be exposed to. How do you do that initially? And we spent some time on that in terms of being able to identify that the person applying for the account is who they say they are, that they're applying not under duress, that they're alive and present when they're applying for the accounts, and how AI and biometrics obviously have a significant part to play in that. For higher value, more sensitive transactions, people are often then required to comply with certain anti-money laundering requirements. So understanding whether people are on any sanctions list, highly topical today, or politically exposed, what's their sensitivity to perversion or fraud, what flags there may be to provoke further scrutiny as part of the process. And then from a point of view as well as doing, not only doing that once, but then being able to do it on an ongoing basis in the background, attaching to that customer profile their transaction history, being able to monitor transactions in the background in compliance, to to trigger any sort of re-authentication requirements going forwards. I think as well, in today's marketplace, because we now are I said, we've introduced a lot of machine learning and artificial intelligence in these processes. I think very topical today in today's marketplace as well is to avoid any demographic bias in that process. We operate, if you like, at the dirty end of knowing your customer. It's very difficult. So if you think of somebody in the continent of Africa, where passport ownership and sort of NFC chip technology isn't quite so prevalent, you need to be careful not to disadvantage those individuals. So we need ways of being able to validate paper identity documents in the same way as you do plastic and the more digitized documents as well. So not to introduce any demographic bias through technology or subconsciously. And you need to do that, by having access to the largest possible data sets, using production data, not just sort of static historic data. And as well as, overlaying that biometric and AI technology with good old-fashioned human verification, human tagging, if you like, to be able to add that level of scrutiny, but objective assessment, as you say, in a very cost-efficient manner.
I think you mentioned a very good point, which is the one, like you have two almost competing elements, right? You have, on the one hand, you need to have a very robust system of checks in place that make sure you stay within the lane of what you're allowed to do. But of course, you also, given the nature of what it is, the service we're dealing with, non-access to it is quite crucial, or is quite significant, and has quite a significant impact on your life. And we have first-hand experience there. My girlfriend has and like we all have multiple accounts. I guess it's true for most of us probably now. She has an account with a challenger bank where she just keeps some money that we use to, like, because the FX rates are better to travel. But then for some reason that we don't know and have not found out yet, earlier this year, that account was blocked for a month without being given a reason of why that was the case. And we don't know to this day why she was blocked. And that's not a big issue if you have, as we all do, alternative bank accounts. But imagine that being the case for your primary bank relationship. Of course, it's quite a significant impact of your life. If I get locked out of my Netflix account for a month, that is quite inconvenient, but I have other ways to still do what I want to do and consume media. When it comes to banking, a higher rate of false positives is not only very inconvenient for the user, but it also obviously has a very negative impact on your business and the reliability that people see in you as a provider. So I think there, absolutely, the finding the good balance between accessibility, but also obviously a robust system is super crucial and super key.
And I was about to say, talking about balance, where should organizations start when they review the entire client lifecycle engagement process?
Shall I take that one? Shall I take that one first? So I think from our point of view, as I said, you've got to guard the front door. Okay, it's much easier to protect the home. So you need to start by making sure you protect your ecosystem against fraud, and you catch those fraud attempts. As I said, 48% fraudulent of activity happens within 24 hours of opening an account. But then you need to build this orchestration of services that allow you to assess your risk initially, dependent upon the fraud signals that are recorded at the time. For example, if someone tries to create a new US bank account from Romania at 2 a.m. and uploads a photo of their ID instead of using a smartphone sort of based solution, to take a real-time copy of the image, that's going to trigger, you know, further scrutiny. And certainly within Jumio, from our own point of view of our identity verification process, we are using AI to highlight areas of concern and for further scrutiny for our own human verification experts. That allows us to target our effort, and it has two benefits: speed and accuracy, ultimately. I think, you know, traditionally as well, you need to move beyond just capturing a static photographic image. They're more easy to manipulate. I think, you know, the very act of getting would-be fraudsters to upload a photo, they're unlikely to use a photo of themselves, which implies they've got to be using some kind of spoofing technology, but it acts as an inherent barrier of and in itself. But so you need to apply sort of biometric techniques to that selfie, to ensuring that it's a real live, not photo, but image of the individual, and that's much more difficult to spoof. So AI, biometrics, and I think, you know, you'd be amazed at how many fraudsters just trying to pass as a legitimate customer by holding up a photograph of that person, or using a digital image they've downloaded from the web. So, you know, all of those elements are key. And as I said, reusing that biometric during the life cycle is key from a point of view of re-authentication.
I think, you know, all of the points that you just mentioned, Simon, like, it demonstrates, you know, that, I mean, this is clearly a digital first way of thinking about, you know, finding solutions to problems that exist, right? So like you said, criminals and fraudsters have that digital first mindset, and then as organizations, you need to apply the same digital first mindset. And it comes back to a point I made earlier around taking inspiration from thinking digital first and thinking client first. And let me give you an example of what I also mean by thinking client, the digital first. My girlfriend, I talk about her a lot, but we do spend a lot of time together at the moment, obviously. So yesterday night, she stayed up until 11:50 on a language learning app. She's learning German at the moment. And because what happens there is you have a leaderboard for the day, and you, by you completing more lessons than someone else, you go to the top of the leaderboard. And she really wanted to win that day, to be #1 for German on that day. And she did it. But it forced her and compelled her to stay up, you know, and do it, and go through something that's a very productive thing to do, learning a language. But the competitive element made it happen for her. And it's such a great, you know, example of a product feature that is built with a digital first mindset, you know, and how do we analyze the experience, and then how can we make it better for the client? How can we engage them more? And that's what we need to do along the entire client lifecycle. And it requires you to not have technology as an afterthought to the process of building a proposition, but it needs to sit at the heart of it. It's the difference between thinking, okay, we have 29 different banking products and we had brochures for them, but now the internet is a thing, so let's put them all on our website in 29 different pages, and then the customer will figure out what they need, you know, in terms of banking products. Or you recognize, okay, a digital first experience allows you to do things that you weren't able to do in the physical world. You take advantage of that. Exactly like the criminals will also fraudsters will take advantage of that. So, but positively taking advantage of means, okay, let's use the engagement we get multiple times a day on the screen that everyone carries around with them to help them make better decisions. And also let's use the data we have that allows us to route them into appropriate products and offerings, and also make suggestions to them of how to potentially, you know, better manage their finances. And then by applying technology along the entire life cycle, you can do these things at scale, automated at low cost. And that's the business case you build. And then you have a winning proposition. You're not able to physically walk into your bank 10 times a day. At the moment, you're not able to walk into a bank once a day, maybe. If it, you know, the context of engagement generally, but then KYC specifically. But using, again, the device that we all have with us all the time, there's different ways of solving that problem. The constraints of the offline world are gone, and when you're digital first, you recognize that.
Definitely. Yeah. Did you
I think just going back on the life cycle, obviously I've mentioned a lot of fraud takes place very early on in that relationship, and we mentioned about leveraging value from that initial onboarding process from ongoing. If you look at other typical types of fraud, which are very costly, potentially to an individual and also to a bank to deal with, account takeover. Typically that happens when somebody has accessed somebody else's password and is able to take that account. So whenever there's a request to change a password, emails can be intercepted, text can be intercepted. But if you're asking a user then to revalidate using the biometric identity that was established early on, that's a much tougher thing to spoof. Likewise, sort of synthetic fraud, when you are acquiring lots of information from lots of different sources and adopting a profile. Biometrics has a very, very strong play in preventing that type of fraud. And of course, whenever you've got you've got a high value transaction out of the ordinary, either for that individual or above regulatory compliance, and requiring biometric re-authentication avoids wire fraud, any social engineering. Dad, please, this is your uncle who's marooned in Africa, please send 25,000. I've had aged relatives who've been exploited in that way through their dementia, but if they were required as a part of that process to upload their biometric image, we would solve that problem. We would take it out from the user having to make a conscious and informed compos mentis decision, if you like. So it has a role to play throughout the life cycle and all of the frauds that occur.
And I was about to ask, as a bank or as a financial institution, how do you select the right technology to fit your requirements?
Well, I think taking half a step back, it's probably also interesting to think about, like, why would you choose an outside party to begin with anyway, right? You could do KYC yourself. You could build all the tech you need to build a proposition like our platform helps you to do yourself. But why would you not choose to do that? I think within financial services, generally, you have this conflict of a compliance and bureaucratic mindset, which you necessarily need to have and need to be to a degree, versus, of course, you are a service business, which requires personalization of your offering. And so it's almost like there's this internal struggle, it means to engage in this balancing act of being Jekyll and Hyde, right? Of being of two minds at the same time. And we believe that as an organization, you should respect, or we all should respect, the principle of comparative advantage, right? I think banks are best suited to focus on building, long-lasting, trust-powered, and very deep relationship with clients. So they are very good at, doing the distribution part. And firms like us, or firms like Jumio, we are best suited to build technology, that allows them to run their business and these propositions at scale, at low cost, highly automated, and with a much quicker speed to market than they could ever hope to achieve. So I think partnering with fintechs there is the method of choice to achieve technology transition. It pulls some of these hurdles outside of the organization that you just are unable, for the nature of your business, to solve internally. And then for us, what's quite central is the idea of the platform approach, because there you achieve replicability, which gives you lower cost, and extendability, which is future-proofness through modularity, and then adaptability, so flexibility to adapt. And it comes back to some of the things we talked about earlier, how you should be able to accommodate a wide range of audiences in your onboarding approach, and then powered by your KYC approach, of course. So, and by us, Nucoro and Jumio, having established a connection between our technology stacks, we lower the cost of implementation operation for you, because the infrastructure is there and you jump on it and build your business model, and the user experience is on top. It also allows you, of course, to to extend on the same technology stack into the future. And the modularity of the approach allows that to, running on the same provider for your KYC, running on the same provider for your the client lifecycle management generally of your proposition. You can do something else. Maybe you go from saving to investing, maybe to trading, maybe to wealth management, but all of it can be powered by the same technology foundation. I think that's what we think is very, very important.
That's great. And I think finally, and because we're starting to be a bit short with time, but I wanted to ask one last question. And I wanted to know from your view, what's next for identity on KYC in the context of money management propositions? Who wants to start with that? Or end?
So, well, I had a couple of comments on the previous question. So I think it is a question of aggregation and expertise, right? And we're able to do, was a bank clerk or a bank teller ever in a position to be able to detect or identify a fraudulent document in any case? So there's a lot of experience that organizations like ourselves build up. We build it on a global basis, and we build it at scale. But so I think, in terms of what's next, that lays the foundation for that as well. As I said, continuing to build out scale and coverage on a global basis. So we're operating increasingly as a global world. Even before we stopped all of the travel, now it's much easier actually to transact globally over the internet. So to avoid that any structural bias coming into play and to truly enable the global world. And to do that, you really need a platform-based approach. There are rich data sources within different geographies that we need to be able to reference and interrogate, cross-reference at appropriate times. So increasing incremental affirmations from third-party databases. In Africa, it's entirely possible to get a completely authentic identity issued, but issued fraudulently. So being able to tie it back to the national identity basis, being established in those countries, a triangulation approach, if you like. We're going to see the continual development of our AI algorithms based on production data sets from specialist organizations that no bank could possibly expect to replicate within their own limited domain, even if they are themselves global. And from our point of view as well, we're taking inputs in the production, not just from financial services, but those same individuals are operating, they're hiring a scooter if they need to evidence their identity with a driver's license. They're renting out their property on Airbnb. So we are aggregating far wider data sets of a user's identity. I think adding on, as I said, ongoing transaction monitoring is going to be key. Some of the geolocation services as well. Are we receiving this information from the geographical location as best we can determine that we expect to be able to do so? And I think as well, interesting, it's how portable will these identities become? And this is more of a question than sort of saying, but kind of bring your own identity. Obviously, we see Bank ID fairly well established in Sweden. Although it's sort of initiated through a bank engagement, it's used in all parts of life within Sweden. So I think there's going to be a lot more collaboration and an opportunity to monetize actually identity in a completely, potentially different and transferable way in the future.
I really liked it. I mean, I think it's great. I really like a lot of the things you talked about. And two things stand out for me, but it's still more what you call, triangulation and collaboration between different either systems or databases. And I think it's very important to think about that, you know, on a, for example, national level or even global level. But I want to be much more humble almost. I would already be happy if that triangulation and, you know, collaboration would happen within the same organization, because I can almost guarantee you, if you're a customer right now of any major bank, a retail client, and you want to open a business, I can almost guarantee you will have to go again through a KYC process, although you're of course already a client with that organization. And that is just, it's not unbelievable. As we all know, financial services is quite believable that that's the case, but it's very, very unnecessary and very inefficient. So if we would only establish a bit more collaboration by using the right tools, like, you know, and the right providers like a Jumio, in the context of one organization, I would be already very happy.
That makes sense. Well, I think we probably covered all the topics we wanted to cover today. So I wanted to thank you both for your time on your contributions. And I wanted to thank the audience as well for joining this session today. I'll say goodbye, everybody, and have a great day.